This 5-step strategy made me 2,000. So let's go ahead and break this down. So ultimately, let's start off with step one. You got to identify your bias, understanding where we are at in the market and what we are going to be looking for. So I'm in the 4-hour time frame. Let's say in this case, I saw there was a break of structure. So what am I looking for? I'm looking for the market to obviously pull back right after it breaks structure. That's ultimately what I'm looking for. Step two, now I hop into, you can do the 5-minute or 15-minute, whichever you prefer. I say if you're somebody that's trying to do, a quick trade that most lasts a day, then I would say 5-minute. If you're looking for something that's more of a swing, then I would do it on the 15-minute. So now on that particular mid time frame here, we're looking for a break of structure to the downside and the upside. So some people may consider this a chalk. Some people call this a change of character. Some people call this a trend switch. So there's so many different terminologies out there. I just want to go with plain and simple. It broke structure to the downside, it's breaking structure to the upside. Right now, it's determining where the next move will be. Third step, hop into a lower time frame, right? So in our entry time frame, so in this case, it's the 1 minute. Now, if you're going to look for a swing trade, your entry time frame will be the 5-minute. All I'm looking for here is a transaction. What does that mean? So in this case, we're looking for a long position. So I'm looking for order flow of demands to follow suit while looking for a supply to form and react, but it does not mean that the demand will fail. We want to see the supply have a reaction and the demand continue to react as well, but it is in control and it shows us that. So seeing this, for example, you have the supply form, right? And the demand form. Beautiful. It reacts to both. So the key factor that we're looking at here is, even though it reacted to both, which one actually stands tall and continues per se the order flow. Since we're looking for a long position, we want the demand to, create that order flow. We want it to stay strong. And obviously in this case, it then, after reacts to supply, it blows through that supply after it taps into that demand. So now that we have that tells me that supply was there. We can then look for another demand. Step number 4, we are now looking for sweeps. That helps us understand that, okay, now when liquidity is swept, this is creating less resistance for the overall play. Same thing with the transaction. If we have the supply show its cards, show its hands, reacts to it, then it blows through it. After it reacts to our demand, we're looking for an entry on another demand here, right? That's just helping us understand and see where the highest probability entry will be with the least resistance to that entry. Now we're going to move on to our final step here, which is the fib, and I guess you can say the risk management. So what am I doing? I'm drawing the fib from the lowest point to the highest point of that whole transaction. Now I want to look for the market to pull, through the 50%. That's ideally what I like. That is the golden zone. That's been like that for years, right? And when I go to take my entry, your risk should change based off of 3 things: your account size, if you're trying to get funded, or you're already funded. Those are the 3 things that will determine how you're going to risk and what you're going to risk. Let's go ahead and do this exact same thing on the live market. So right now I'm in the 4-hour time frame. It broke structure to the upside. Beautiful. First step completed. What are we looking for now? We want to see the market pull back into that same area that, it just broke structure, right? You want to see it pull into that void, right? But you also want to hop into your mid time frame. Remember, if you're trying to enter a trade and only be in there for up to a day, then it would be the 5-minute time frame. But if you're looking for a swing move, then I would recommend to you look for something more in the 15-minute as your mid time frame. For this video, I'm only looking for a very quick entry to last me maybe 30 minutes to an hour. So I'm on the 5-minute. It broke structure to the downside. It actually had a lot of volume going to the downside. Look at that wick. And now it's breaking structure to the upside. Beautiful. What is our next step here? We hop into our entry time frame. Like I said, that will change dependent on the duration of the trade you're looking for, right? In my case, for this video, I'm going to hop into 1 minute because I'm only trying to be in here maybe an hour at most, right? So once I hop into, let's say, the 1 minute, I'm going to look for the exact same setup. Nothing is different. Nothing has changed. So now that we're on the 1 minute, the entry time frame, right? I'm looking for the market to pull into. I mean, it kind of did a little bit there, but that's not what we're looking for. We want to see a commitment. We want to see the market like exactly like that. So as it's slowly pulling more and more down into that void, that's when we're going to start looking for a setup. So right now it's kind of bouncing back and forth, and how I look at it when it's ranging like this, it's just generating liquidity, sweeping liquidity. I always tell people you want to stay away from that when it's ranging, because you're not going to find an entry. You're really not. And if you do supposedly find one, more than likely you just became liquidity for that actual entry, the actual move that's coming. Guys, do not mind. I'm just going to go ahead and speed it up a little bit. So, okay, now we're starting to see something here. Now it's swept to the downside. We see that. Beautiful. So I'm just going to mark that out, right? I'm going to see how the market plays into it. So let's go ahead and hopefully look at it as this is the start of the order flow, because I'm looking for the long position here, right? So you want to see a supply fail and you want to see a demand stay in control. So right now hasn't tapped into it, unfortunately. It was really close, but okay, now this is what we're looking for. It finally taps into it. I'm sure a lot of people probably took that previous entry there and they probably just got kicked out. Unfortunately, I hate to see it, but that's what it is, right? So now I'm seeing a demand and a supply form in the same area. Okay, the supply, it looks like that's not a real supply. That's the whole point here. We're trying to clarify, is the supply actually there, or are we just drawing random boxes, right? So at this point, some people probably took it as like, oh, that's a beautiful entry right there. Well, not really. I mean, yeah, you want to see a supply fail, but you want to see a reaction to that supply to verify that it was actually there. Because as of right now, how I view it is this demand could all be right, let's say, but it's not clear to us to take an entry. Okay, now that's something to go off of here. It slows down when it gets into that supply, then it taps through it. That's what I'm looking for. Not immediately just blows through it. That's what I'm looking for here. So at that point, that is a demand that some people could take an entry off of. Personally, me, it was a little bit too aggressive or too short, I guess is the best way of putting it. So I'm just going to go ahead and let it play out a little bit. So we have another supply there. It has a reaction. Yeah, so that's a demand that I would be comfortable somewhat taking. It is a little bit aggressive, but just because, we want to be extra cautious here. And in this case, I would say, most people are probably trading with a funded account. So why not take the A++ setup that you possibly can do, right? So in this case, now that is pretty clear to me. It's not very, very short and cut up into each other, right? So here it's showing me proof. Okay, there's a supply there. It's reacting to it. And it also is reacting to that demand. I would say it's safe to at least start figuring out, how are we going to approach this? Meaning, if we were to take this entry, where's our stop loss going to be and where's our TP going to be, right? So let's go ahead and start planning that out. And that's what you should do before you even enter the trade. You should have that plan, meaning you should have an exit strategy. You should have a full understanding like, okay, where's my TP going to be? So in this case, right, we're just going to go ahead and just let it play out for a second. And as it taps in, beautiful. I've used the fib so many times at this point. I'm kind of eyeballing it, and I promise you it's probably right on the dot. Okay, it's a little off from, let's say, where I should be putting my final TP. So it's not that bad. So it was a 1 to 4, right? That's beautiful. That's a beautiful setup. So now using the fib from the low to the high, right? And it takes what? 12 minutes? 12 minutes. And that was, I think it was a little over 2,000, of a trade. But like I said, guys, if you need any help with anything, if you have any questions, you're more than welcome to reach out to us on our Discord. As always, stay profitable.